What's up guys, it's Selka. Today I'll be covering Bitcoin and Ethereum in the smaller time frame. So it will be especially about the little move that's happening right there. It's super interesting and I'll give you guys my thoughts about it. Also, somebody requested to see the previous chart from my how to find the perfect trade setup video. I'll check it out quick and see what's going on in the chart as well. So yeah, let's see this right after the intro. Alright, so before I get into it, I just want to make a quick announcement regarding the new people that are joining the channel on a weekly basis. So there's a lot of new people that are joining and they are probably wondering what is the wave theory and how I learned it. So basically the wave theory is the trading method I use for my analysis. It's based off the Elliott wave principle, which you probably know about. It's basically when you count impulsive wave and corrective wave. You might have heard it somewhere else. And also the Dow theory, which is basically about trends and momentum. All right, so when you mix out both method, you end up with the wave theory, and basically this is a simplified version that helps you out on understanding what's going on in the market, and that is super powerful. So this method was created by Anil Mangal. He's a YouTuber, and I'll put his link in the description as well as the logo in the top left corner if you want to check out about his videos. He's super good. He's making English videos, so there's no problem about it. You'll probably learn a lot from him. And also, if you're French, there is a YouTuber that also helped me a lot learning this method, which is wavetrading France. So if you want to know more about the wave theory, I highly recommend you to go watch their videos. But also watch mine, because I will be giving advice on patterns, on many things regarding the wave theory. So I hope you will be interested into it. I don't plan on selling any formation. I'm not into that at all. I'm just talking about the market and also making analysis for you all. It's purely because I like it and I simply love it. All right, so we're gonna get into it with Bitcoin, starting from the smaller time frame. So there's nothing to say regarding the bigger time frame. You can watch my other videos if you want to know what I'm expecting. But basically, as long as this, I would say as long as this bottom is not broken, there's a running flat right there, which is a 3-wave correction. But the way this running flat looks, it's most likely the running flat will most likely happen as long as this doesn't become a big impulses. So there's nothing to do with this low anymore, because in theory the running flat is a pattern where you have something like this. All right, and as long as you don't break this bottom, you will have another impulse, because you have this first retracement right there as an A move, the second one as a B move, and the third one as a C move. All right, and you have this impulse up, so you'll end up with another impulse up. All right, and now the thing is, usually you have your A wave that is similar to your C wave. So basically your A wave should be around the same size as your C wave. And when you look at this pattern right there, if I draw this and I put it over there, you see that the C wave is a little bit bigger. There's no problem about it yet. But if you see it spike down, there is a lot of chance that this running flat won't happen, and in fact you will end up having a bigger correction, a different correction, and this will be part of an impulse. So there won't be any move right there related to a correction. All right, this will just be a whole impulse, and you'll have another correction for another impulse up later on. All right, so that's the risk. Now, as long as we're staying within this range, I think we're kind of safe. What I said last video was, as long as we don't break this low, we're safe, and I still mean it. Why I'm saying this is because we're still in an uptrend, and this was our latest correction for an up move after this impulse. So you had this impulse, correction, up move to break the top, and as long as we stay above this top, we are still on an uptrend. So if we break this low, I'll expect a bigger correction and then a drop for simply a bigger correction, like I said. But if we don't break it, all right, if we don't break it, I still see like imagine we do something like this but we don't break it, I still see the running flat. That could be a possibility. So these are the two scenarios. There's only actually two scenarios, so you got to focus on both scenarios and see which one has the most probability by following the smaller time frame. All right, that's the goal. So I know I said I won't do smaller time frame, but I ended up I won't do bigger time frame, but I ended up doing it. So all right, doesn't matter. Now in the smaller time frame, remember one of my latest video, I think I told you about this move, that I was looking for an up move, simply because when I zoom in again, right there, when I zoom in, so you barely see it because you can barely see this impulse up right there, this green candle, but you had a down move, you had an up move, which is an A move, all right, and then a correction like this, B wave. So the goal was to break this top, give a C wave, all right, by breaking this top. I'll remove the arrow so I don't lose you all. Break this top, all right, give the C wave because you haven't broken the low, so it's the regular flat on a downtrend. You have them on the top right corner to help you out. So you break this top, you give this regular flat, and then a drop. And now we saw that the C wave was being super slow, but it doesn't matter, all right, as long as this bottom is not broken. It doesn't matter if the C wave is super slow, it remains the same. So break the top and then have a reversal. So now people are probably wondering, all right, so what happened if there's a reversal in the bigger structure? How can you tell that this will be a correction for another drop and that won't be an up move, an impulse to break the top, since you're looking for an impulse to break the top because of that running flat that I talked earlier, because of that pattern right there. I told you that this could go up and break the top, but why were you looking for a drop in the smaller time frame? So the reason why is pretty simple. So you never know when the move will go up, all right? You know that the move should go up at any time soon. You got to follow the smaller time frame, but you never are 100% sure that it will go up. And how you can put those probability by your side is simply because, all right, in the smaller time frame, we got to focus on it. You see that you need an up move right there to break the top, but the only condition that will assure that you will go up for the impulse that we're looking for in the bigger time frame is if it flags. All right, if it doesn't flag, you assume that it is a correction and not a reversal. So it is a correction for a drop, and this can't be a reversal where this goes up like this, all right, as long as you don't have a flag. So that's why using this trading method, the goal is to make to see a flag. When you have a flag, you put an entry above the flag, because you never know, this can drop and give you out this correction. But if you put your entry above the top, there's less probability for it to drop and take you out, all right, if it to pump and take you out, sorry. So if it pumps, you know that you have a lot of probability that this goes up for the running flat in the bigger time frame. But if it drops, well, if it pumps and it drops, you don't have a lot of probability that happened. But if it only drops, you're not in the trade because your entry was right there. All right, so you see how it works. Basically it helps you out not being in the trade when it's not going in the right direction. So basically, regarding the smaller time frame, I'm still looking at this pattern as a correction. So A, B, and the C that was supposed to barely break the top on an impulse ended up being a wave that is a little bit bigger, but it's still a C, right? You still have A, B, and the C like this on some sort of a 3 wave, but it's still a C, all right? Keep it simple. It's still a C. It breaks the top. It didn't give the flag. It did not give the flag, super important. So this has a lot of probability to happen and give a drop. So I repeat, this is super important. If you wanted to trade the running flat and you were waiting for a setup, if you wanted to trade the up move like this because of this pattern I said earlier, and you wanted a setup to enter an entry, you had to wait for a flag. You had to wait for a flag that you can at least see on the 1 hour chart, and if you see it on the 4 hour chart, it's better. And what I mean by a flag is this, right? This was a flag. This was a flag. because this was a small correction in the smaller time frame, that means we're going up. But right there, look the difference. There's no flag. Right there was a flag. Right there's no flag. And when there's no flag, you must assume that you're going down because you have this pattern, right? So it looks pretty difficult to understand, but it's pretty simple at the end. All right, the thing with the wave theory is that it's easy to understand but hard to master, and that's the truth. It's super easy to understand because it's logical, it's mathematical, it's pretty simple. You had to match impulses, leave the correction alone, and gather all the pieces together, but hard to master because you need to recognize some move, and that will probably take you some experience, some time, but at the end, trust me, this helps you a lot understand the market. So from that point, this was a top, all right, and like I said, it didn't flag. So if it does do not flag, all right, if you don't see it flag, then you must go for this pattern instead. So let's say you wanted to trade the running flat in the bigger time frame, but it did not give the flag, but you know that this pattern means that we're going to break the low. How do you enter in this trade? Now, how I do enter in this trade is that I wait for a drop and for a little flag, and it doesn't look like a flag, all right? You must understand the difference between having an up move, a drop, and a little flag, and having an up move and a flag. Both are different, all right? The flag is staying above, it's basically above and on top. Right there, you have an impulse before, so the flag is not there, all right? You see it, and you have a little flag under it, which means this is a correction for this impulse down, and this will give another impulse down. But in this case, this is a correction for this impulse up, so this will give another impulse up. So I hope you can see the difference between both. But yeah, now that you are trading this, you're trying to short this, to sell this. At this point, you're looking for a little setup. Like I said, you can watch my old video, my latest one before, I think it was 2 videos ago. You can watch it. And I said, wait for a setup, looks like this, put your entry right there, a stop loss right there. That's how I do it, and take profit right there. So it's still the same. If you're in the trade, you protect yourself by putting the stop loss, move it in front of your order. You can even take some profits, but it's still the same. The goal will be to break this low from now on. Now, what's even more interesting is that this setup, right, was cool and all, but the target has not been hit yet. So the take profit has not been hit. And of course, you don't take all your profit. You take just a little bit in case this dump to 22k, for example. So you take a bit of profits. But what's interesting is that now you have a drop, all right? And this was a small correction in intern. Within this impulse, there was a small correction, which was your entry, all right? But now you have a bigger correction that is being created right there for your impulse. What this means is, again, we're going to do the same process, same thinking behind it. This correction is an ABC, and you clearly see it. There's 3-wave ABC. So this will probably break the top, and this will mean that we will have another impulse down. Now, in what case I should be careful and say, all right, this could go up and take me out of the trade, is if, again, same thing, if you break the top, if you see it break this top right there and flags, same thing. Now I'd be careful for this move to be a bigger one. So let's say it breaks the top and this whole piece be a bigger one. All right, so that's the whole process. You got to be careful of that flag, and if there's no flag, which I think won't happen, I don't think there will be a flag because this looks like a regular flat to me. It reminds me of this one, right? This one was a perfect regular flat. So you have an A move, B wave, C wave for a drop, and the move started from the top, so it was from the drop. So you see, same thing right there, A, B, C, same thing. So I think it will go down, all right, because no flag. There was no flag right there. There was no flag right there. And right there, same thing, A, B, C. So no flag, this should probably go down, all right, if there is no flag. Now, you can trade this move on different, there's different way of trading this move. You almost never trade the A move. So this wave you almost never trade it. This one, it's hard to catch, it's not worth it. So I never trade the A move. The goal is actually to just hop in on the correction. So if there's no correction, you should not hop in. So if there's only an impulse and another impulse, there's actually no trade to take. But if you see it range right there, so if it give a correction, actually what it was giving right there, so right there it was giving an up move, a correction, which seems to me like a correction because it looks like you have an ABC right there, a regular flat. Then you can try to hop in the long to break this top, as long as this bottom is not broken. So if there is a setup, that's super small time frame. All right, now we're probably in the 5-minute time frame. But if there is a setup, taking the trade right there, stop loss under a low under this low, and the goal is to break the top, it could have been a good trade. All right, but now it's too late. The next trade is probably this drop. All right, if there is a setup, if it breaks the top, dumps and give a little flag, you hop in, stop loss right there, entry, and take profit right there. That's how I think about hopping on trades. That's how I do it. So right there, I know there's something going on right there. I won't dive into it because it's a bit complicated for those that don't know about the wave theory. There is a possibility that this makes basically a running flat right there, because like I said, all right, I didn't say this at the beginning, but the wave theory is a method that works on every time frame. So you gotta understand that there's different time frame. Right there you have an impulse on the 5 minutes, a drop on the 5 minutes, all right, that I call an A move. You have a three, what seems like a 3 wave, which is a corrective wave, which is always the B wave. So the corrective wave is always the B wave. So this could break the top, give another drop for a C wave, and give a pump for this running flat. And you can see it on the top right corner. This will be a running flat, this will break the top at the same time and then drop. So if you don't want to break your head understanding those kind of stuff, you gotta keep it simple. All right, you gotta keep it simple. The goal is to break the top as long as the bottom is not broken. All right, break the top as long as the bottom is not broken, and it's not. So you have your A wave, B wave, and wait for it to break the top. When the top is broken, see if there's a reaction. If it dumps and give a small flag, it's perfect. You try it, you can sell it and take profit right there. All right, and if it's not, if it range, then you got to be careful for those that are already in the trade. You got to be careful for those that are in the trade right there. But for those that are not, you wait to see what's going on with the flag. And actually the whole pattern doesn't really fit with a flag and an up move, so I would not even take this buy. All right, I would just let it go and focus on the sell, because like I said, this move means that it's going to break this low, and there's actually no sense that it makes a flag right there. It could happen, we don't control the market, it could actually happen, but if it happens, I don't want to be in the buy. All right, I'm focusing on being in the sell as long as I don't have a clean setup, and this means sell. All right, this means sell. So even if it means buy in this smaller time frame, there's no target actually, so it's probably not worth to take the trade. All right, so now focusing on the sell, and I do see this move dropping a little bit all right, dropping and breaking this low as well as this one, and would complete all structure. So when the low will be broken, I'll make another video to see if we're going for the running flat right there. So if the next move will be a buy, which could be super interesting, or if the next move would be a correction. So in both cases, when the low is broken, I'll be looking for buys. So this area is perfect for buy, and be careful on that low, like I said earlier. So that's it for Bitcoin. Ethereum. All right, Ethereum, there's a different thing. All right, so in my video regarding Ethereum, I told you to be careful for this pattern. All right, so it was similar to Bitcoin, but not really that much. The thing with Ethereum is that you can count this as an A wave, just like Bitcoin, the first pullback, and you could either see this as a B wave and this as a C wave. All right, and this would complete your ABC for another drop to break the low. This was the first scenario, and now the second scenario, and I'll actually put it in yellow. All right, the second scenario is that you have a move up, you have a drop, which is your A wave. This drop right there would be your A wave. You have a B wave that looks like this, a C wave that looks like this. So this completes a running flat correction, an ABC. I hope you can clearly see it, because since you didn't break the bottom of this first impulse, you can end up being on a running flat and have another push up before the drop. All right, so the only difference between both is that one, you get the arrow to break the top one more time before the drop. On the other side, you simply drop. All right, now what you gotta understand to see which one has the most probability to happen is that if there is a range, and I'll put it in blue because it's super interesting. If there is a range, this means a correction for another drop, because you have an impulse before it. So you have an impulse before it, correction for another drop. So you ended up being with a lot of probability to have this first scenario, the blue one, to happen, and not the second one, which is the yellow one. So basically now we can already forget about this up move. Now what's going on, and let me remove all this crap. What's going on is that you have a correction right there. You have a correction right there. This will probably drop, break this low, and break this one as well. So just like Bitcoin, it will be the same, and you can forget about this potential running flat right there. I'll forget about it because there's a range, so there's pretty low probability. I don't say that it won't happen, but there's actually low probability of it to happen. So let's just focus on the sell. And also something interesting. So I know some of you are not even trading with the wave theory or using it at all, but I still think that it's something that you must at least learn the basics of to help you out on your trading journey. Whether you're using support and a resistance or indicators, I think you must at least have the concepts, the basics concepts of it. So right there, I think people will be trading this trend line down. So that's why there is this range. All right, I love to use trend lines and just to have a clue on what's going on, because I know people, there's a lot of people, maybe the majority of people are trading trend lines, support and resistance. So I like to use them within my wave theory knowledge to just help me out figure out if there will be a correction or there will be an impulse. So of course, since you know people are trying to short this trend line, this move became much more corrective after an impulse down than it was supposed to be if there was a running flat. So if there was a running flat, it will have broken through this correction, maybe pull back through this trend line, maybe pull back over it and go. But since it never broke through and it kept ranging, keep it simple, this will be a correction for another drop. There is maybe 90% chance that it happens. So trust me, in my opinion, this will happen. That's my bet. Correction for another drop, and that's simply how it works. So when you have impulses, you get correction, impulses, correction, impulses. So that's how it works. This whole piece becomes an impulse, this whole piece becomes a correction, and we're gonna wait for another impulse. So again, for those that are wondering the wave theory, what it is and how you use it, pretty simple. In fact, you just have to differentiate, understand properly the difference between impulses and corrections. So impulses, correction means another impulse that will break the top of the first impulse. All right, so when you have an impulse right there, something that looks like a laser sword, you expect a correction, and when you have a correction, you expect another impulse to break the top. So that's pretty much how it works, and it works in fractal, which means if you have an impulse like this, a correction, you expect another impulse. But you gotta understand that this whole piece can be a three-wave correction, which is a correction for this impulse down. Because if I simply move it out, let me try something. It's not like this, it's not like this, sorry. Is it? Alright, I cannot do it, but I was trying to turn the whole structure around. But basically, yeah, if you see it, impulse, correction, impulse, the same way this was looking like this. So you had an impulse, a correction, so you were expecting an impulse, you got it. Now that the impulse is completed, this can be a three-wave correction for a drop because you have an impulse before it. You understand? So basically the market moves like this. That's how patterns from the smaller time frame becomes patterns on the bigger time frame, and that's basically the fundamentals, I would say the basics of the wave theory. So as long as you understand that you're in a correction, you can at least a bit forecast the next move, the next impulse. All right, now I know there's a technical part to know which correction you're in, how to enter, how to know that you're at the end of the correction, but this is a bit more tech. All right, you got to focus on the principle to understand properly the power of this method. Is the principle is simply to understand when you are in the correction. So regarding Ethereum, I think we are in this correction, all right, because you have this whole, let's say you have this whole impulse up. I think you are in the correction. And now why I say this is because just like I said for Bitcoin, you had an impulse, an A move, you had a correction, B wave, and you had a C wave that broke the top, right? I just said that for Bitcoin, right? I said, what is the condition when the market will give a push and there will be a reversal? So if there's a reversal, what is the condition? You need a flag, right? Now it's either a flag or a corrective structure that we know about, for example, a regular flat. Let's say I drew a regular flat right there, either a flag, so something a little bit blurry, or a regular flat. In both cases, this means that we're going up, whether or not there is this pattern like this. All right, whether or not there is this correction for a drop, it can simply be a reversal, and at this moment it happens with a flag or a correction. And I think for Ethereum we're not gonna break this low. I know that there's a possibility, but because of how it ranged, I think we won't breaking this low. Right, it ranged like this. To me it means that you have a correction for this impulse, which will lead to another impulse. Now when the top will be broken, we'll see if we drop or not, but for now let's focus on piece by piece. So next impulse up, all right, and this will happen after breaking the low in the smaller time frame, because this is a correction for another drop. So maybe right there it will go up, you see. So let me just go through this with you. Let's say I'll copy this pattern, all right, because I think it's super interesting. Let me copy this, all right, and I'll go to Sol. Sol has an interesting pattern, all right. So same thing, all right. Let me just do it in front of you so you understand. You have an impulse, all right, you have a drop, an impulse which is an A move, you have a correction which is a regular flat, this one was clean, B wave, and then an up move to break the top, C wave. Now tell me if it did flag. Actually it did not flag, all right. It did slowly drop, giving sell setups, but it simply drops, all right. It did not give a flag or some sort of correction, consolidation on top. It simply gave a drop. So that means that this has a lot of probability to go and break the low, all right. So if I compare Ethereum, which I think won't break the low, all right, I don't think Ethereum will break the low yet. If I compare both, you might see the difference actually on why I say that Ethereum probably won't break the low. So let me put it like this, all right, and all right, let me compare them. All right, so in one case, I don't think I can clearly put it one over the others, but it's okay. In one case, I'll just put it right there, side to side. I think it's better. All right, so in one case, you have a drop and some sell setup to get into the sells, all right, some drop and a sell setup. And in the other case, you have a move that came actually up near the top range, give another drop. So this could actually be a correction and a side, because it's actually looking like it did. It's just like if Sol did something like this, all right, but Sol did not, it simply dropped. So the difference between both chart is that this one can give another push up before a drop, all right, if it wants to drop, but in the other side, this one will probably simply drop. So that's why I'm bullish on Ethereum in the short term, at say 4-hour chart, and I'm kind of bearish on Sol, because I do expect this to come and retest the low. So that's the difference, guys. That's what I wanted to teach you on this video, at least show you. So the difference between what's happening when you break the top, if there's a flag, this means another push up because it's a correction for this impulse. But if there's no flag, like there is no flag on Sol right there, that means that this will simply drop. It won't drop straight up like it did right there, all right? It doesn't need to do that. It can simply drop, give small correction, drop, and that's it until it breaks the low. So that's about it, guys. I hope you liked this video. Oh yeah, I almost forgot about it. So let me move this one right there. So last video I talked about this being the perfect opportunity, in my opinion, as a chart, the perfect trade setup. All right, I'm not giving financial advice. All right, I'm not telling you to buy this. I'm just telling you that this is super clean. The reason why is simply because you have this 3-wave correction. So you have an impulse, you have this 3-wave correction, A, B, C, and now you have a little impulse right there, a drop, which is a smaller correction. All right, a smaller A, smaller B, smaller C. So this one right there is a regular flat, similar to that one right there, and this smaller one is a running flat, similar to that one right there. All right, you see the difference? You have it in the top right corner. Both means that there should be another impulse. So in this case, this one means that there should be another impulse to break the top of this structure, and this one means that there would be another impulse to break the top of this structure. So what happened when you have both? That means that you're going to break both top. In that case, the next impulse, which is the next impulse of the smaller structure, so we got to focus the smaller one first. This next impulse could be the impulse that comes and break the top at the same time. It will complete both structure, and yeah, simply would complete both structures. So this is the scenario that has the most probability, having an up move that breaks the top and this top. All right, so this is the scenario 1. Scenario 2 is that you can have an up move that breaks the top and then a reversal to make a bigger correction before an up move. So that's the scenario 2, but I don't think it's super relevant in this case because we gotta focus part by part. So I think right there an interesting trade will be, and I will be taking this trade. All right, I have no shame telling you about it. I don't recommend to do it. I simply can't give you financial advice, so you do whatever you want with this information. But personally, I'll be taking the trade. I'm just waiting for a little flag in the smaller time frame. All right, so I could have hopped in somewhere right there, even though it doesn't look like a flag. I really want to have a little flag because I will be trading this coin actually. But if there's a flag, I'll hop in. All right, so probably with a stop loss right there. Let's say your stop loss is right there at minus 20%. My break even will be at plus 40%. All right, so I'm already 2 times. My break even will be 2 times up my stop loss in terms of gains and loss, and my final TP would be, my TP will be at plus 160%. All right, so that's how I would be trading it. So I repeat, I'll put a long position. Imagine I'm taking the trade right there because it flags. Stop loss will be there, take profit will be there. All right, and break even should be right there. So if it goes up, move the stop loss that was right there, move it right here. All right, so you at least win 40% on your trade, and at best you win right there 160% on your trade. And that's if you take full profits. All right, of course I won't take full profits. I might just take 80 to 70%. I know that's a lot, but that's what I usually take on structure like this. So 80 to 70% will be out. So I will be I will do maybe 2x on my money, and the rest will be left in case it goes higher. All right, so I just wanted to go back in this chart because it's super interesting, because like I said in my last video, we were about right there, and I said I was expecting a drop, complete this running flat, then an up move. So one move was good. I don't know if some people sold it. I don't even know that if you can short it. I don't think so, but main focus right there is the buy at this point. So this video was a bit long, but I hope you guys learned something from it.